But I think you want to be on the offensive versus the defensive, especially into the fourth quarter. Seasonally, this is a great time.
Hello everybody and welcome to my channel. Today, we've got a crucial call from Hightower's chief investment strategist, Stephanie Link. She says we need to be on the offensive right now. But first, let's hear her take on why markets felt so shaky last week.
Yeah, I mean, the volatility is definitely increasing. September, October are typically the two toughest months of the year.
And that's exactly right. But the interesting part is that September actually didn't play out that way. It was the best September since 2010. So the pressure falls on October a bit more. Now, the reason the volatility got bought is key. It comes down to economic strength and the AI revolution.
But I think the reason that the volatility got bought is because the economy continues to chug along. The Atlanta Fed tracker just came out last week at 3.9% for the third quarter.
That 3.9% GDP forecast is hard to ignore, and it's why talks of a recession have quieted down. In fact, on banking earnings, Link has a great point that refutes the fear.
I mean, the big six really, for the most part, very, very good. The net interest income, the guides were higher and better than expected. You had huge fee income growth. Investment banks, I mean, the numbers were like up 40% in fees. Huge numbers there.
She even looked at 9 different regional banks, and the story was the same. That Zions issue? She says it's a one-off, a buying opportunity.
I looked at 9 different regional banks, Becky. Same thing. For the most part, net interest income was better, and the guides were higher, and credit was really good, and fees also really did help. So Zion's kind of a one-off, I think. By the way, the $50 million in terms of the charge that they took is less than 1% of their total assets. So I know it was scary, but I think a buying opportunity. And
if we are playing offense, where are the best places to be? Link is focused on the huge capital spending driven by artificial intelligence.
Yeah, I still like the industrial plays on AI, so like the data center build out and the grid upgrade. So Quanta Services, Eaton, Vertiv, Rockwell Automation, those companies I think are going to do really well.
What to avoid? Now, just as important as what to buy is what to avoid. Link made a big move recently by selling off all of her traditional energy holdings.
I own no energy stocks. Yeah, I mean, I had Diamondback, I had SLB. They're amazing companies. But when you have an administration that wants oil prices lower, and they have been going lower, it's going to be hard for this sector to do well, to outperform. So
the final word, play offense. The fourth quarter is historically a great time, and managers who are underperforming are going to chase performance hard.
But I think you want to be on the offensive versus the defensive, especially into the fourth quarter. Seasonally, this is a great time for the markets.